bump up yet again this morning. Dipan Mehta of Elixir Equities joins us on the show. Hi Dipan, good morning and good to see you. Dipan, the big tailwind this morning is crude oil prices at a multi-year low, which is great news from a macro perspective and for select stocks as well. So let's start off at that point. A couple of these companies will be in focus, the OMCs, the paint companies, Interglobe as well. What do you like from the pack?
Yeah, good morning, Nigel, and thank you for having me on your show. Just one company, usual disclosures, Indigo, Interglobe Aviation. I think that it's in a nice sweet pocket at this point of time. Despite all the consolidation in the airline industry certainly has been benefiting Indigo. And recently, I think we saw that for the last month, there was 11% bump up in the volume of traffic. And a lot of pricing power has come back to the airlines. If you see optically also, all the flights are going full. At a time like this, I think they will retain a large part of the benefit which is coming in from lower crude oil prices. So very positive on that company, reasonable valuations, and good growth prospects from expansion into overseas markets or international routes as well.
Okay, fair enough. Dipan, hi, morning. You, of course, as we've been discussing, turned negative early. And have been constructive, sounding more constructive over the last few times we've interacted. So this is it. The moment is here, Dipan, in a broader sense. I'm using that term liberally, that we start to get more constructive. I mean, now, of course, we've got calls and we'll put these out on the institutional side as well. I saw something from Jefferies. I saw something from, I think, Nigel, CLSA it was, or Goldman? BofA, Bank of America. Amish. Yep. So, the voices are coming together that maybe time to get in, time to buy. Just your thoughts, Dipan, on the broader setup.
Yeah. No, good morning, Prashant, and thank you for remembering that I had turned negative early, and now I'm pretty constructive is a nice word to use, and very optimistic as well. And unless something goes drastically wrong on the Trump tariff front, or there's some, again, geopolitical event or something, I think the market is near about its bottom. And I know a lot of analysts and fund managers feel that stocks are still quite expensive. But at the same time, there's still quite strong liquidity coming into the markets as well. The IPO market has dried up, and that usually takes 4 to 6 weeks to kind of rev up. And we are seeing slower pace of sales from promoters, and QIPs also have kind of reduced. So in a few weeks' time, we should be getting into a nice liquidity position as well. So I feel that markets are looking good. It's a challenge in terms of identifying the sectors and the right stocks, but I think a lot of choices are there. Only thing we want to avoid at this point of time is any external focused business, because don't know what's happening over there. But within the domestic focused businesses, I think banks, which are a large part of any Sensex Nifty, they should do very well because of various efforts being taken. And cyclically also, I think we're seeing upswing in overall urban consumption. So some of the investment themes have certainly turned quite attractive.
Dipan, hi. Good to have you on the show this morning. Let's discuss auto, because it's all happening, right? We heard those headlines, and it seems that the showroom has already been decided. It's going to be BKC, and I'm talking about Tesla. We still don't know what is the duty value going to be. So ultimately, how much those cars are going to cost. But for the listed auto space, would there be any concern? Would you look at an M&M differently? There are already lots of views in the market that maybe the M&M correction is overdone. But what's your sense? And also a call on the other passenger vehicle makers where numbers are very weak.
Yeah, good morning, Subhi. I think this entire import duty reduction on imported cars has affected the sentiment in the auto sector per se. I don't think fundamentally anything has changed, but they are in a soft pocket when it comes to demand. But look, then valuations also are quite attractive. Long-term growth trajectory is pretty decent for these companies. Interest rate cut will certainly benefit auto volumes as well. And lower cost of transportation also sometimes acts as a trigger. So actually the fundamentals are the way they are, just that this entire new threat has come. And we don't know how it's going to play out also, whether there are going to be quantitative restrictions or it's going to be unlimited imports. Unlimited imports certainly will be damaging at zero custom duty will be damaging to the industry. So I would just say that given the situation and the entire outlook, just be a bit cautious on auto, just wait and watch. I think that sector may underperform and the stocks may get even more attractive. But yes, I think Mahindra and Mahindra and Eicher Motors, two companies, are certainly reached levels where they can outperform going forward. So these are the kind of two stocks that we like within the sector, where investors could be overweight.
Okay, all right. Dipan, request you to stay with us. Well, in close to around a minute or so, the pre-open rates will start flashing for you on the screen, and we're bracing for a good trading session. Hopefully, it's not a disappointing trading session, because yesterday's close was very, very good. And today you have a lot of tailwinds: lower crude prices, softer dollar index, the RBI injecting liquidity into the system, and the markets, well, still down close to 14% from the recent peak. Dipan Mehta is still with us. Dipan, thanks a lot for hanging on with us. Tell us, what's your view on these exchanges? You would have seen expiry on all of these days. You would have seen the market opened at 9:55, then opened at around 9 a.m., then talk about it getting extended. But now it seems the NSE, after a while, is taking the fight to BSE. And now we'll have to see what BSE does next. But BSE in the last few trading sessions has lost close to around 20-25% of its market capitalization. Yesterday it saw a recovery. Your view on the stock?
See, Nigel, I think that these exchange stocks are still quite expensive, but I think MCX certainly is a very interesting position, because their options trading volumes is just increasing, and there's hardly any competition over there. BSE, I'd be a bit cautious, because valuations are still on the higher side, and now that trading volumes have come off and all these events have taken place, I would just be a bit cautious on BSE. Maybe at lower levels it would look more interesting. And we need also to track where the NSE IPO is at. At some point of time, this we'll see an NSE IPO. And that has got both positive and negative implications for BSE, because it'll get listed on BSE, so it'll kind of generate more cash volumes for BSE. But at the same time, I think that's one exchange will be available to the public to invest in. Right now, the only equity exchange which is available for public to invest in is BSE. So the entire space I would just avoid, with the exception of maybe MCX.
Angel One, they have come out with their monthly update. It's looking quite weak, but the stock as well from 3,500 has gone to 2,000 rupees. Bulk of the bad news in the price?
No, Nigel, I don't think so. I think that within the capital market space, you need to be with the wealth managers, the 361 or Nuvama, Anand Rathi, Well, Prudent. I think those companies have got good, strong annuity incomes, and they're focusing over there. And with the wealth effect taking place in India, and more investors going in for advisory or discretionary products, I think the prospects of these asset managers is far, far better than even the stock brokers. And you could add Motilal Oswal also to the list, where the focus is now more on annuity incomes, on fund management, rather than, brokerage, of course, is one of their core businesses. But this contribution is gradually going down over the years, what we have seen, and valuations are very attractive. So within the entire capital market space, I would go with these companies. And if valuations come off, then CAMS and KFIN also are certainly worth watching out for, but not at these levels.
Okay, not at these levels. That's capital markets for you, Dipan. You may want to listen into this next story, because this is important.